When you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, we're going to look at United Healthcare. It is the highest price stock in the Dow. It is, you can see it's trading at 517. Just wanted to show you, now we had a major ABCD pattern down here. There's three drives, drive 1, drive 2, drive 3. The bottom was perfectly symmetrical from low to low to low. We came up, we had a really nice rally, stopped almost at the exact 618, missed it by a point, and then the market backed off over 10 days. On that 10-day pullback, it stopped exactly at the 382. You can see within $2 of the exact 382, there's your ABCD. That tells us this stock could easily, and this is, I'm saying easily in the easiest sense, could easily get up to this level here, making new highs on the year. And that's only, you're talking $40 to get to that level. So that's really not very much. This run here has been, well over $60. So that's United Healthcare. Now let's take a look at Goldman Sachs and our good friend over in the Valley of the Sun. Hold on one second here. There it is, GS, Goldman Sachs. Now this one is a monster, folks. You really, this stock is so closely held by the employees, and why not? The thing's been going up forever. But look at this, folks. Since the October low, that was that big low that we were looking at. You remember with all those cycles that occurred right there, we had the gap up. Look, there's not any correction here. All during November, December, January. Then you go sideways. There's hardly any corrections here. There's nothing here. Then you have a gap up. Then you have this little pullback right here. This is the biggest correction that it has. It goes from 420 down to 90. It drops $30, and that's all it can do. And look where it is right now. It's all the way up. And I have no idea where it's going. If we look at this on a very long-term weekly, you can see that we have exceeded the 1.618 expansion that came in here at 457. Okay, see, now we've already talked about this on another program, how we manage these highs and lows. You can see here that last high was right there. This one should have come in right here. It ended up being a low rather than a high, and boom, away we went. And that's the last major correction that you've had, so that's the only thing that you can guide yourself on whether this market is making an whoopsie daisy. Let's just get this up here so we can see it correctly. There's your A leg, there's your B leg, C leg. So we could see 511, that's only $50 higher than where it is right now. See, trading above the 1.618, folks, like we are today, that you can't stand in front of that. I'll show you several reasons for that this morning, and maybe it'll, sink in. At least it has for me over the years. Okay, since we're doing that, let's talk about that for just a second. And then we do have a potential trade today. Hold on one second. And let's move this. Well, we should do that right now, folks. Let's just do the potential trade here. Well, is it not a potential trade? This is a trade. So here is the Australian dollar. Now, as you can see here, we're looking at this over the past 6 months. And we have made a 61% retracement of the high that we made way back here right around Christmas time. We've also made a perfect ABCD pattern. You can see it forming right now. Okay, so it's trading at around 66.80, and your stop would be 67.10. You're risking $300. Now, if the sell-off is like the last one, your profit potential would be well over $1,400. So you're risking $300 to make $1,400. Okay, now those of you, and I know there's a bunch of you out there that are real dice rollers and like to spin the roulette wheel, can go to the house of cards and do the euro trade, because here is the euro. We'll get this up here in just a second. Now this is the euro on just a small time frame, but we need to go to the daily chart. because this is where the fat lady sings. Okay, here's the euro, folks. You want to see, this is the most heavily traded thing in the world. It dwarfs what the stock market does. This is real money, folks. This is countries moving money and corporations, not little guys like you and me. But there's your 61%, your 78% retracement of this last high right here. Now look at the similarities that we have going for us. From the last move we had from February 12th into March was that high, okay? Now, if Andrew Lowe is correct and markets repeat themselves, you come over, and there you are right now, exactly where you should be, okay? Now, a child can see the A, B, C, D move to the downside at 106.23, okay? Now we've left a gap here, folks. You can see this gap that's right here? That's really important because you will never see a gap on a well, there's not even a gap here, but to see a gap on a foreign exchange chart, oh, something big has happened. So if you ever see that, and maybe this is the one, that's it. But this is the number here in the euro. It's lined up perfectly. Your stop is roughly $300. If you're a big time speculator, like, oh my goodness, am I not getting data? Oh no, not again. Well, folks, I don't know what's happening. I got 2 minutes here. It stopped getting data. Anyway, this should be sold right up here. By the time we come back, you'll probably be stopped out of it anyway, so it won't make any difference. If you see this thing, when we come back from the break and it's trading above 186.70 or 186.80, 90, something like that, then there's something wrong and you won't have to do this. I don't think it's done that because I put the trade on and I haven't seen a flash that something's different. So I'm not getting data. Boy, that's just really upsets me. And it's really important today because we're seeing so many things happening. If you remember that I've been talking about the increased volatility that's coming, and we've seen that in copper. Copper hit 513. We're going to cover that. I think we have enough time to cover it right now. So let's just get over to the copper. And, well, I can't find copper. I got so many of these to do today. I'm having a difficult find. Let's do platinum first because platinum will be the easiest. We have multiple ABCD patterns that occurred here up at this level here at 1064. The last price I had it on was on 1069. I don't trade platinum very often, but it has multiple ABCD patterns in through here, all saying we should be up into this area. And if we look at this from the high down to the low, you'll see that the 78% level comes in within $2 of what the high has been. So your stop would be above this 1078 level, selling at 1064. That would be about a $600 risk if you were working on that trade. If you were doing that, let me check and see. I'll tell you all of my, I think we're ready for a break anyway. I know we got 50 seconds left. I will do the copper when we come back up. Let's just look at this intraday on an hourly chart. See, we had a we had a little bit of a break here. It broke down to 50. Let's just see where we are. See, we broke down to 50. We went up and made a new high. So we're still in the zone where this could, but I don't know where the prices are. So I'll have that when we get back. So stay with us.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, the Australian dollar is setting exactly at the ABCD level here. Here's your 618. That difference is 15 pips, which is $150. So there it is right there. Your stop would be right above here if you decide to do that. Now, if we go and look at the euro is right pretty much where it was when we came back. It was at 7.7. There it is right now. So your stop on the euro would be up here at 108.93, something like that. 97. You're risking $200 is all you're risking if you're going to do that. You can see here we've had they've corrected the gap, because it looked like there was a gap there, but there in fact isn't. You can see here we opened basically unchanged and ran up to this on the numbers of what we're looking at. Okay, now let's get to talk about copper, because that's really a big thing, folks, because copper is so important to so many of the things that we have. I have been so wrong where I thought that the high in copper was, you remember, I thought it was going to come in at 479. And now we're going to take a look at it. There's where I thought it was going to come in, was right about here. 469. Then we backed off down here just a tiny bit, virtually nothing. And we had this high right here last night. Now, looking at this, we're going to look at it on a long-term weekly, because this is the highest price copper has ever been, ever, folks. The old high was way back here. Remember, this is the futures. It's not the cash. The cash price used to be 502. We hit 513 last night. So the first thing I did when I get up this morning and I see it trading at 502, I wanted to see what happened. So I go to, all I'm going to do now, folks, is talk to you about these numbers that I believe in. Okay, now here is what I was looking at last night. First thing I looked at is I saw the low here, and I measured that last swing down, because that was a big swing. From 502, we came all the way down, dropped 15 handles, and then we went up and hit the exact 61% retracement last night. Now, I want to show you what happened after that. I'm just going to get up a smaller chart. I didn't do any of these trades because I was asleep, but I wanted to show you. It's hard to believe that I was asleep, but it was. Okay, there was your first 3/8 true retracement right there. Okay, here was your second. I'll just mark them in so you can see it. These are the things that we're going to be doing a week from this Friday on the 24th. This one is exactly pretty much exact on it, missed it by half a penny. And then we've had the move down, and as you can see here, we are now above the 382 of the whole thing. So let's get rid of all of these. And I want to show you, we had a lot of volatility today, folks. Believe it or not, folks, we had a 30-cent move up in wheat and a 38%. There it is. There's your 382 right now. You see above it by a penny, and we had a little bit of a pullback. So, but these 382. Here's the second one. I just wanted to show you from there to there. There was your second one, spot on. That told you that this was the bottom, because if you have an ABCD there at a 382, that's going to take you right down to where you think you should be, within about 2 cents of the exact bottom. So you can do that. You can trade these things intraday like this. Now, let's take a quick look here at something that everybody trades every day, which is the E-mini S&P. I wanted to show you because I had a really strong suspicion that we were going to get to where we are right now as the high of the day. Okay, here's the reason. Okay. Now, I did this real early this morning because this is drawn just a little bit off. Let me draw it correctly, okay? Might as well do it the right way if I'm going to do it at all. See, there's your low. This machine. They made it too sensitive, so I've got to make it from right there. See, it catches the wrong low. All right, give me 1 second. I'll get this thing right eventually. Yeah, there it is. There's your high right here. You'll see it pulls down to the 382 within 2 points. That's a small ABCD pattern. That tells you that your high should be right about here at 53.26, the high for the day. I'm not saying it's a high for the year. That's the high today. The reason why, if you did the same thing that you did with the copper and measured it this way, there it is. It says it should be right about between 24, 30. What was been the high so far? 24. So right in this zone is where you'd expect a correction, and the correction should be like the last one. All right, just go back and look. Correction should come down here about 510, somewhere in that ballpark. That's what we're looking at for today. So I'm just saying now, one of the people that I speak to quite a bit is a breakout trader. Now, when you got a double top like this in a real bullish market, you break out above this. See, buying that breakout doesn't give you any heat at all. All you had was this right here. Let's just double check to see if that little move, no, I don't think it was a 382. No, it's not even close because this thing is so strong. But this is the area where you should run into a little resistance up in here, just based on this pattern, just like in the copper. Not really much difference. Okay, now we're going to go across the pond here, and we're going to take not across the pond. We're going I've already taken care of the copper, so let me get that out of the way. We want to take a look at crude oil, because if you remember, and I know you will, we were watching for crude oil to make a lower low on this move right here, and we did by just a heartbeat. We were talking about that, making a lower low. Why were we doing that? Folks, let me just show. This is the daily, all right? Now, all I want to do is to take this out, and I want to go and start looking at our gasoline contract, because that was one of our key gasoline contracts, okay? And we were looking for it to make a new low right here. There was your 61% retracement right there, right within 10 cents of the low. If you bought it at 245, you got a nickel profit in it, well over $2,000. So hang in there and see what happens, because this could be a really nice move. And that's what we're paying attention to. Same thing happened with the heating oil. Heating oil went down to those numbers we looked at. And when that was happening, the crude oil was making a new low. Now let's just bring that crude oil back. Did I take it out already? I hope I didn't. Let me put it back in again, because something was really happening cool from my perspective. Maybe not from yours, but from mine, it was. We'll get this up here and take it in. Right there, I was looking at the AI program at that time, and look what was happening with the AI program. There was the early morning high. There was your predicted low of the day, folks, right out of the Floor Traders Handbook around 10 o'clock. And there was your low. What was it doing? Making a big ABCD, making a new low by just a hair's breadth. When the gasoline's making a 618, heating oils make a new low on the day. And look at the rally we've had. We've rallied almost $2,000 today, folks. Now, once you get past the 3/4 part of the day, the rest of the, you can see some of these work a little bit, but there's an inversion here, and this is the main part of the day, is this right here and this right here. So, well, that one too, but these are the main ones. So that means we're probably going to maybe start to sell off a little bit here in crude oil, but that's not this last, see, when you do the 2-minute charts, the first 3 quarters of the day, the first 75% is the most accurate. The reason why is, folks, you've already gone through 200 2-minute bars, so the last bars are the least predictive because they go into the next day. That's just historical stuff that we've learned. So let's take a break. Jerome Powell will be our guest at the break.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, folks, I'm back. We're talking a little bit about the crude oil. Just show you the day's action today in crude. We made the bottom here Market rallied up, pulled back right to the 382 retracement. Had a big ABCD rally up here. What you can see, there's the 1.618, which would have been your ABCD. You exceeded that. Then you pulled back and you made a perfect 382 off of the last low. Just absolutely spot on. That's the old, anyway. And now you can see we're heading higher. And you got little patterns in here, but this is could be a very, very bullish pattern, folks. Why, I don't know, but that's the way it looks like. Okay, we've got that one. Let's talk about something else right now. We'll cover some of these other things. We're having tremendous volatility. Let me show you this, folks, because this was something that we were watching real closely. There is our corn, and you look at, we want to be buying corn down here at 470. Do you see that corn made a higher high? There was our target right here. It made a higher high by 1/4 cent today, and now it's backed off. This is what we're looking for, and right now with this type of action, we got a good chance of getting corn here down about another 15 or 20 cents. So keep that on your, we've already gone through all these things. I don't want to go through them again because it's a little bit tedious, I guess, would be the word, and not interesting to most people. Try to keep it as interesting as possible. This is the area we want to be watching right here. 473, that's down 15 cents. So we'll see that. Now, that made a higher high by 1/4 cent. Well, what did wheat do? Let's just get this up here, get this out of the way. And here is our July wheat. And July wheat did exactly the same thing. When I saw this one happen, I said, oh my God, it's Christmas Day. Anyway, here's where we are. You see where we had the high up here, right here at 96. You can see today's high was 97. We missed by 1 penny. Now, remember on the daily chart, see this thing, look at these, you see these 3 little drives right here? There's drive 1, drive 2, drive 3. That's what that is. It's making a little tiny 3 drive to a top pattern, and here's the real corrections coming now. Now let's look at it on a shorter term basis to see, and I haven't done this, folks. See if there was a 382 along the way here. No, but there's a little pattern here on just a little pattern. You can see the tiny ABCD pattern right here. There's A, B, C, D right there, but there's no 382 here, folks. This is a one-way Corrigan. You can see your 382 would have come here up about 82, and this was 78. So, you know, we're still moving down in the wheat. Now, looking at wheat on a longer term basis, let's get it up here. Folks, this is a flat bullish chart. Don't let anybody tell you that it isn't, okay? Let's just clean it up and look at it for what it is. Okay, this is where they had Putin in the doghouse when he was selling all that grain to keep the, what do you call it, other people. I didn't realize this. Rich Anderson told me that Russia is the largest wheat exporter in the world. I didn't know that. Well, we'll see. Anyway, there was our low right here, major low. Pull back to the 78% level. Then we had to run. Watch for this. This is your Christmas present. It'll probably come before July. Well, it's going to come long before there. We're 30 cents away, but watch this number here in July wheat, okay? That's going to be really interesting for several different reasons. If you pull this over and see this, you'll see this big high that we made right here. I believe this was a perfect 127 to the upside, as I recall. Oh, misses it by about 5 cents. But here's where you want to be watching it right here. This is your largest correction we've had so far has been from 63 down to drop 35 cents to that level right here. This was a 382 off of this one. We've done this before, but since we got new people in the room, there's a 382. Here's another 382 showing you how bullish it is. This is telling you don't want to screw with that stock market, folks, because this thing has got 382s all over it. And when the top comes, they're still going to give us a chance, so just be patient. I will tell you this, that gap that we have today in the cash S&P, if that one's not filled, we're going places that even this old cowboy's never seen. Anyway, this is what we're looking for right here in the wheat down for a few days. This is now, because we made a higher high, this is only the first day down, so it's going to take several days to get down, and it is going to be the biggest correction. Well, the biggest correction would take you here to 36. That's down another 30 cents. What you'd like to see, you've already dropped 40 cents. Well, let me see, 92. You've already dropped 35 cents today, so you got another 35 to go. You'd like to see that take 4 or 5 days to complete, and then you'd have something that you can hang your hat on, all right? Now let's move over and get this out of the way. And let's see where we are here with the euros doing nothing. It's the same as it was before. Let's just look at it on a mini chart just to see what we're doing, because it's made a slightly higher high. This is where we were looking to sell it right here. So it's up a couple ticks above that, but this should be it on the daily, and I'll just show you why. There's the reason. We're right there. Now, this doesn't mean that it's going to, let's just take a look at it from the really big stretch, okay? Last big high we had way back in December, and we are setting right at the 50% level right now. So that's it. We've got a 50%. We got multiple ABCDs in here. This doesn't work. Nothing, no big deal. Just go on to the next one. So there's your ABCD pattern completing just about everything that you could ask for in a trade, but that doesn't mean that it's going to work. That's for sure. Now, let's play with real money, and we'll get to gold and silver in just a minute, but we need to talk about the old bandolis, because they have made the Federal Reserve's job so easy to peddle this stuff. Let's get the weekly up. Okay, there was the weekly ABCD down here, 114. We got down a little bit below that, and you can see here we've exploded to the upside in here. I should have given this a little bit more respect than I did, and we bought some down there, made a little bit. Then we took a small loss on this 382 right here, but look at this thing. This thing has got a chance. I don't know if it's going to happen or not, folks, but as crazy as things, remember, this is a weekly chart. We could see something like this in interest rates. They talk about the dropping interest rates. Well, you could get bonds all the way up to 131. Now, what would 131 be on the weekly? Let's just take a look at this. Now, we're going to come back here. And, I've been bearish bonds for 2.5 years. This was it. There was your 135 pattern right there, the mother of all sell signals. There was his cousin right there, the perfect 382. This is where you lay the hammer down. Right on the old 382 right there. Boom, bang, bing. That gives you your profit objective down in here. Now look where you are. If you get to that level right here, okay, what we're going to do now is we're going to hopefully lighten this up. There's what we want. We're going to take out some of this stuff, and now we're going to go back to this high that was way back on my birthday, July the 28th of 2021. And there's your 382 coming in right there, boys and girls, at 31. So we could make that. Let's take a little break. 877-927-6648.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, I want to go over the, remember this is Wednesday, here's Monday, Tuesday, Wednesday, here's where we are now. I just wanted to show you where the, remember I really thought this was a pretty good high, had a little move here really nicely, nice move down here. This move was from, to 40 some bucks, almost $50, but here is where the things changed right here. I want to show you why that was important. This is a daily chart. Now, if we go down to the hourly chart, I want to go back and show you where that was happening. That was right here. This is where the structure of the market changed. Okay, now here was the big move down. Okay, we had an A, B, C, D pattern right there on the bottom. That was there at 22.85. There's your A leg, B leg. This is one of those report days, but there it was right there, spot on the money. Then the market came down, pulled down to a 50% retracement right here. Nothing exciting about that. Then here it is early in the morning, and then we have the big move up. We went to the 61% retracement, but here, and there it was right there. That was the sell signal, 23.84, and it came all the way down to right here. Now here's where you had to be really, really super careful. Let me show you why. And just clean this out right here. Now this is an hourly chart, so you got plenty of trading in between. From your low that you made right here to your high, you'll see that came in just halfway, almost to a 50%. There was your 382 right here. This was the key day right here, folks. That was yesterday, all right? That was the key day. Let me show you why. That was when the report came out. I'm going to move that around a little bit. You see the market, you might think this is crazy stuff, but it's not. There's when this is where they came out with the market stuff. If you saw the pullback right here, that was right at a 78% level. Then the market took off. This little pullback here. Now this is just a 3-hour pullback, but that was important, and it wasn't a 382. Just give you, and I follow gold this way. That's been serving my purpose for a long time. From your low here, you see it pull back right to a 50% level. Then it started to move higher. That told you we're going to go at least to this level. That's today's action. Now, today's action, when the report came out, you see you had a pretty big run up all the way up to here. Then it backed off. This back off today was just like what happened in the S&P the other day. That's the back off right here. See, it had this big move down just like the S&P did yesterday. Remember when it dropped to 2015 and then it just roared? This is the roar. So if you look at that from your low that you made back here, that real key low at 23.10, okay, you draw the high in, which was right there. Bada bing, bada boom, there it was. And you can see we're $38 higher, $33 higher already just because it hit the 61% retracement of the low made 4 days ago. So that's why it's good. Now, where does it tell you you're going? Higher. Higher, higher, don't make me a liar. There's your well, you can see the large ABCD is going to take you up to at least almost to new highs. And this one will most certainly take you to that level, okay? There's your AB leg, there's your CD leg. It's going to take you just to right the old high. Now, we've already looked at copper, so let's look at, and we've also looked at platinum. So we're going to look at silver right now. And please hold the whole, Al has just asked me at TFNN to please stop calling in, folks. The line is so filled that they're not able to get anybody on the air. Okay, that's what let me get rid of this. Let's just do a 8-minute chart on this so we can see it real easy. Okay, same thing in silver. Silver's getting ready to take a rocket ship ride, I'm afraid, folks. Well, I'm not afraid because I like silver. Okay, here's silver here, folks, over the last 8 days, okay? You can see the 382s, how nicely they acted. Now, once you went above that, 382s are no longer in play, so you want to be looking to be a buyer. The last major low that we had from low on May 8th, you see it came up and it pulled back. The 382 is right here. It's within 5 cents, stays there for 1, 2, 3 days. Okay, then it starts its ride. That tells you that you're going to go at least up to here. That's a new high. Well, we're only 20 cents away. That's not a big deal at all. But we have a major low right here from 3 days ago. So let's just see what that pullback was. That would have been right here. And if you measure it to the one we had this morning, from that low up to that high, it made a 50%. The 382 was here, it made a 50%. So stop would have been below the 618, looking to buy it there. Previous day's low, if you'd have looked at that one, there's your low right here. And that would have been exactly 618 right there. So there's you're heading for new highs in silver, folks. 30, 28. And from there, let's look at the daily, because this don't look too bearish to me. Look where you're going. If that's the case, hang on to your hats, because the Lone Ranger, Clayton Moore, is in the house. And we've got he was my favorite cowboy, by the way. Well, actually, I liked Roy Rogers too, but not until I was an adult. I liked Hopalong Cassidy and the Lone Ranger. Also the Durango Kid. The Durango Kid lived here in Tucson, folks. He died here in Tucson. He had the distinction of being married 13 times. And I said, boy, he must have loved women. And my lovely wife said, a man that's been married 13 times does not love women. And I think the little lady hit it spot on. Anyway, we're looking at possible another $5 up here in silver at 34. Well, there might be a little resistance here at 32.42, but this looks like, we're going higher. Folks, it looks like they're playing with funny money. When you look at these bonds doing what they're doing, okay, that means they've been doing quantitative easing and all this other stuff, so they're throwing money at it. You just can't stand aside. The thing that upset me, well, not upset me, but challenged me the most was that S&P chart. When the S&P kept going higher in the cash, I had never seen that. And now you see the reason why. So that's it. That's all I can tell you. That's all I know. And we'll move on to the next one, see if we've covered everything. Yeah, we're doing good here. Let me see. We got the gasoline's moving higher. Crude oil's moving higher. Everything's okay. Let's see how we're doing here. Yeah, they actually got a profit in the euro. So keep your stop in there, 30 pips, folks. That's time out, boys and girls. We have to look at something. If you're looking at the euro, you're looking at the Australian, you got to look at, what? Yes, sir. Don't forget this one. This is the dollar index. Want to get the daily up, because that's going to be spot on at a pattern or something's wrong. And there it is right there. There's a dollar coming down. Oops, let's get it out of the way here. Here's the U.S. dollar right where we are. If we can't finish this on this run, I will. This is a beauty. There's your high up here. Misses the high. Now you've come down and you're setting right at, let's just take a look at it, from your last low to your high right here. You're almost exactly at the old, nope. And you also have, this could be a problem because, well, yeah, it's got to maybe a little, this could be telling you that maybe this is not going to work in the euro. That's why you've got to get your stop in, because we are 30 pips away. Well, your stop would be below here anyway. So that's the possibility here that the U.S. dollar index is moving a little slower. We're going to take a break, believe it or not. We'll be right back. 877-927-6648.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, our guest tomorrow will be Mike Moore of Moore Analytics, and on Friday we have Mr. Peter Elides will be as our guest. He is making a huge call up in here, folks. He's saying that we are looking at a top of monumental proportions. I have to agree, but boy, I'm looking at the Empire State Building on some of these things. So all I do know, folks, is that when it does come, we're going to be there because we got lots of tools that tell us, yeah, this is where we want to make our play. It's not about how much money you make. It's about how much money you don't lose. If you understand that, you're going to be far, far better off than most people. That's the real key to what we're looking at here as we're watching some of these markets unfold. I do have a request, and that is, I say this every day, and I really do mean it. Try to help some of your friends and neighbors that are having difficult times these days. It might be a short journey to the supermarket or the pharmacy to help them, or taking them out, bringing them a meal or something. We try to do that, folks. That's what we need to do here. We don't need to see all this hate that's in the news all the time. It just literally makes me quite ill. So, by the way, we're also sitting right near that number that we're watching is 5326, which is the S&P high that we had forecast based on the 1.618 expansion. Folks, that's a minor, I'm speaking as a gold miner. No, it's a minor high, but we should get at least 10 or 15 points out of that, I would think. But the risk on that is if you see a trade above 53.31, 6 points, then you're gone, your history. You take that as a learning lesson and not listen to the old cowboy, because I'm wrong a lot of the time. I'm right smart of the time, but the one thing to do is I don't stay wrong for very long. And that's what's kept me alive in this business. So live every day in an attitude of gratitude, and may God bless. And we'll see you folks on the flip side tomorrow. Thank you.